Happy New Year. Hi, I'm Brett Carleton, coming to you from the offices of Heritage Wealth Management. I want to take just a few minutes and talk about 2025, the markets, and just some economic events, and then just talk about some trends that are occurring right now. The two big news stories from an economic standpoint this past year obviously would have been the April tariff announcements and the market's immediate reaction to that. But then also how quickly the markets reacted or recovered from that. Within 2 months, the markets were fully back to where they were prior to the tariff announcements as they retracted some of the tariffs and also reduced some of the tariffs. So that's, again, one of those lessons on how investors often hurt themselves by reacting to news stories, things outside of our control. The other big story would have been the tax bill. And what that really did was it creates certainty and planning for not just individuals, but also corporate investors. There were tax incentives that were built into that as well that encourage businesses to invest in infrastructure and capital type investments. And we've seen a pretty significant announcement of increases in capital expenditures by companies, which ultimately lead to more GDP, more economic growth. So those are two big events last year that I think had a very positive impact on the overall economy. And as good as last year was, think of the two areas of the globe that actually did the best from an investment standpoint were international stocks and the emerging or developing economy stocks were both up over 30% last year. And who would have imagined that with tariffs being imposed against these other nations? So, again, these are good lessons for us long-term investors that we have a plan in place and we stick to that plan. I want to touch just briefly on some of the trends that we had last year and what I think we will see continue on well into this year. And the biggest one is this build out of artificial intelligence. These, not just large technology companies, but many companies are spending billions of dollars on this build out of this infrastructure for artificial intelligence. Very similar to what we saw in the 90s with the build out of the internet. And then along with that is this need for more electricity, more reliable electricity, and we're seeing quite a bit of capital investment there, which again ultimately should lead back to more economic growth, which is positive for all of us that live here in the United States. Other trends that we've seen continue is inflation and interest rates have both been trending down, and I believe we'll see that continue into this year. The Fed's expected to lower interest rates a couple more times this year. And inflation has been trending down. And I think we've got a couple things that are going to really impact that this year. It's going to be lower energy costs, which translates into not just transportation, but manufacturing costs, food production costs, fertilizer costs. And I think we're going to be in a period of lower energy. So that will be a huge factor for inflation. The other one is housing. We started to see a softening in housing and even rents coming down in many parts of the country, which will translate into the lower home number that they have in the CPI, their Consumer Price Index, because housing is actually 1/3 of that index, and it's a lagging indicator. They're looking back over the last 18 months. So I think we will see inflation continue to trend down, which should allow the Federal Reserve to lower interest rates, which should be good for consumers and hopefully will encourage and stimulate housing here in our country. Employment has been stable. We've actually seen some of these lost workers since COVID coming back into the workforce looking for work. That's a very positive thing because we still have in excess of 7 million job openings in our country. So again, positive trends. The other thing is consumer spending. Consumers have been spending money. Corporations are at or near record profits. This holiday season was interesting because it was a little bit shorter season because Thanksgiving was so late, but we had record holiday spending. And with the new tax bill, we're expecting Americans to get larger tax refunds this year, somewhere in the neighborhood of 160 billion to 180 billion of additional tax refunds. And of course, as Americans, we will spend that money, which ultimately should be good for economic growth as we go forward. I want to take just a minute and just talk about a book I had read over the holidays here. The title is Winning the Loser's Game. It was originally written in 1985, I believe. It's in its 8th edition, so they keep coming up and updating it. But the author shows how long-term investors tend to be their own worst enemies. And it's not just individual investors, but professional investors as well. And his keys are have a plan in place and just don't listen to the outside noise. And I know I say this every time I talk to you, but we have a plan in place for you, and we live that plan, and we don't let these outside unexpected events, derail us from that. We've already had our first one this year. It won't be the last. But anyways, we have a plan in place, and we will continue to live that plan for you. So, as always, we're here for questions. Any comments that you'd like to share with us? Here's to a happy and prosperous 2026, which, by the way, is the 250th birthday anniversary of the Declaration of Independence. So thank you for your time and listening today.